Thank you for joining us for today's webinar. It'll be on why waiting to buy life insurance can become more expensive. Lock in lower rates while you're younger and healthier. Before we get started, let me introduce myself to you all. My name is Chad Strano. I'm a brokerage manager here at Penny Insurance. I've got my contact information on this slide here. My email is cstrano@pennyinsurance.com. And my direct line to reach me is 916-960-8705. So please reach out to me anytime after this webinar. If you have any questions or if I can help in any way, explain any of the content we're sharing today. All right, so why waiting can be expensive. Waiting to buy life insurance is expensive because age and health risk increase every year. And insurers price policies directly around those two factors. The longer you wait, the more you pay, sometimes double or triple for the exact same coverage. A little diagram here on risk classifications. Like when you apply for life insurance, underwriters look at your personal details like health, age, and gender to determine how risky you would be to insure. That's called your risk category or risk classification. It affects your premiums. And as you can see, there's 3 levels here: a preferred, standard, and rated. So preferred, a person in excellent health and no major risks, premiums are obviously going to be lower than normal because of your good health. Standard, a person in normal health and no major risks, premiums are normal. Now rated, as a person in poor health or who has major risks, premiums are going to be higher than normal. Another little graph just to take a look at on male versus female life insurance rates. And as you can see in the left-hand column, as the age goes up, the premiums go up. And it's broken down for 3 different face amounts: $250,000, $500,000, $1 million. And you can see a discrepancy between female and male. Males are always a little bit higher. And as you can see, it jumps in premium as the years go up. So the earlier you commit to a policy, the better the savings are. The longer you wait, the more premium you're going to have to put into the policy for the same coverage. So age-based pricing, that's what we're talking about on that previous graph. Every birthday pushes you into a higher risk category. A healthy 30-year-old might pay $25 a month for a 20-year term policy, while a 40-year-old pays $50 and a 50-year-old $110 for the same coverage. So you can see how the premium goes up dramatically as time goes by. Another graph here, rates increase with age. On average, premiums increase 8 to 12% every 5 years, starting in your 30s. And as you can see by the graph, age 25, it's very low, $23. And by 50, it's $136. By 65, it gets very expensive, $400. So obviously, getting in sooner is always better when it comes to life insurance. Proving your health at a young age to the insurance company and locking in a low rate is going to be to your benefit. Okay, compounding premium increases. This kind of correlates with the last slide. Premiums rise 8 to 12% per year on average and can double between ages 30 and 40 or triple by 50. So I think we can all understand how important it is to get something while we're young before any health issues creep in. And that's what we'll talk about on this next slide is health changes. Conditions like high blood pressure, diabetes, cholesterol issues, or sleep apnea often appear in your 30s through 50s. Even mild changes can move you from preferred to standard, raising premiums 30 to 50%. Insurability risk. Waiting increases the chance you develop a condition that makes insurance more expensive or makes you ineligible. It's even worse for traditional coverage. Many health events are sudden and unpredictable. If we could all see into the future, we'd know how to plan everything perfectly, but we don't. So taking action early and getting your insurance taken care of while you're young and healthy is definitely going to benefit you and your family in the long run. Fewer policy options. As you age, some term lengths, riders, and higher coverage amounts become unavailable. You may be forced into pricier non-medical or guaranteed issue policies. The ability to be able to prove your good health to the insurance company while you're young and healthy is what's going to establish a low premium for you. Then the funnel gets narrower the older you get and the more health challenges you incur. Compounding premium increases. Age when you buy, 30, approximately 25 a month. Young and low risk. Age 40, $50 a month on a 20-year term. The age risk is higher as to where it was low before because you're young. Now you can see it's going up with age. Age 50, more than double. Age being factored in, plus likely health changes. The non-obvious cost. Even if you can afford higher premiums later, waiting means you're paying thousands more for the same protection. Money that could have gone to savings, investments, or your family. And if your health changes, you may lose access to the best price policies entirely. So the bottom line, life insurance is cheapest when you're young and healthy. The second best time is today. Waiting almost always costs more, not just in premiums, but in lost options and increased risk. Yeah, it's not just the money that gets more expensive, but the ability to choose the best plan minimizes. How much more could I pay if I wait 10 or 20 years? Well, here's another way to look at the numbers. Let's say you buy a $250,000 20-year term policy at age 30 for $25 a month. Over 20 years, you'll pay about $6,000 total. Now wait until you're 50 and the same coverage could cost $110 a month. Over 20 years, you'll pay about $26,400 total. That's a $20,000 difference for the same coverage. Imagine what else your family could do with that extra money. Pay off debt, fund college tuition, or add to retirement savings. Another great question that comes up a lot. Isn't my employer's life insurance enough? Many assume their employer provided life insurance is enough, but here's the catch. It usually only covers 1 to 2 times your annual salary. And it often ends when you leave the job. It's rarely portable if you change employers. If you wait until later in life to purchase your policy, after you've left your job, you'll face higher costs and potentially fewer options. Owning your policy ensures you're protected no matter where your career takes you. Some FAQs. What is the cheapest age to buy life insurance? The cheapest age is always today. But generally, the best rates are available in your 20s and 30s before most health issues appear. This is where I'll give you a quick example. A good friend of mine about 10 years ago came to me in his early 30s and wanted to talk about getting a life insurance policy. He had no kids at the time. He was in perfect health. He had just bought a home and he was concerned about what would happen if he passed away. And his fiance at the time would be stuck with that mortgage. He questioned on whether he should even get the life insurance. He didn't have any children, but we put together a policy for him for $500,000, around $50 or $60 a month. And he was fine with it. The reason I tell the story is even though he was perfectly healthy at 33, when he took the policy out, he ended up developing cancer and passing away about 7 or 8 years later. And it was a huge relief to his fiance, as much pain and she was in from losing him, that the money was there to pay off their home. So we never know what's going to happen with our health in the future. And that's why we keep talking about getting this coverage placed while you're young and healthy. Can I still buy life insurance if I'm already sick? Yes, but your options may be limited and the premiums will definitely be higher. Some companies offer guaranteed issue policies, but coverage amounts are smaller and costs are higher compared to traditional policies. How much life insurance do I need? Well, a good rule of thumb is 5 to 10 times your annual salary. But the right amount depends on your family's needs, debts, and future expenses like college tuition or mortgage payments. That's why you need to sit down with your insurance agent advisor and go over a plan that's best fit for your particular situation, because it changes from person to person. Should I wait until I have kids or a mortgage to buy life insurance? No. Buying early locks in your rates while you're young and healthy. Once again, we keep going back to that. Even if your needs are small today, you can always increase coverage later. Oop. Is term life or whole life better if I'm buying young? Well, it depends on your goals. Term is usually more affordable and great for covering income replacement during working years. Whole life is more expensive, but lasts your entire life, builds cash value, and many people start with a term and add a whole life later. I did exactly the same thing. I took out a term policy many years ago, and then about 7 or 8 years ago, I took out another whole life policy. So those options are always available as long as your health remains good. Just keep in mind, as we age, the cost of the insurance goes up, and the chances of us getting a health issue is likely. So the bottom line, waiting costs more than money. Procrastination with life insurance comes with a real price tag. Every year you wait, premiums increase, your health risks rise, and your options shrink. Life insurance is one of the few purchases where acting early saves you money, guarantees your insurability, and gives your family lasting protection. So take action today. Talk to a licensed life insurance professional, compare your options, and lock in peace of mind at today's price. Your future self and your family will definitely thank you. I think we covered that slide. That's a duplicate. And I think this is as well. We already hit on that. What happens if I develop a health condition before I apply? This is one of the biggest risks of waiting. And I see it very, very often happen. And it's one of the one most people don't think about until it's too late. Take that example I gave you of my friend. What if he had waited to get his insurance later? Well, after he developed cancer, his options would be close to none. He chose to take action while he was healthy and locked in his peace of mind. So, serious conditions like heart disease, diabetes, or cancer don't announce themselves years in advance. They can appear suddenly. And once they do, your options for life insurance shrink, sometimes drastically. You might still qualify, but at a much higher rate. You might only be eligible for certain types of policies with limited coverage, or in some cases, you may be declined for coverage entirely. When that happens, no amount of wishing you had applied earlier can change the outcome. Why locking in rates early saves you money. When you're approved for a term or permanent life insurance policy, your premiums are locked in for the entire duration of the policy. That means buy at 30 years old, pay 30-year-old rates for the next 20 years. Wait until 40-year-old, pay 40-year-old rates, double the cost for the next 20 years. Think about it like buying gas. If you had the chance to lock in today's price per gallon for the next 20 years, would you take it? Life insurance works the same way. Only instead of filling your tank, you're protecting your family's security, your family's financial security. Great question here. What if I can't afford a big policy right now? Well, some is better than none, even if it's not all. Another common question people ask is, what if I can't afford a large policy right now? Well, the answer, start small. You don't need $1 million policy to begin. Even a modest amount of coverage can provide your family with breathing room in the event of an unexpected. And because you'll be locking in today's lower rates, you'll still save money compared to waiting. Later, as your financial situation improves, you can add more coverage or purchase an additional policy. But you can't go back in time to get younger, healthier rates. We already covered that. Advantages to working with a life broker. Working with a life insurance broker gives buyers clear, measurable advantages because a broker represents you, not a single insurance company. The result is better pricing, better fit, and better long-term support. Core advantages for buyers. Access to multiple insurers. Brokers work with many companies, not just one, giving you a wider range of policy options and prices. This increases your chances of finding the right coverage at the right cost. Unbiased guidance. Because they aren't tied to a single brand, brokers focus on matching your needs, not selling a company's product. Better prices through comparison. Brokers shop across carriers to find competitive premiums, especially valuable if you've been declined or rated due to health conditions. Expert help with health-related approvals. Brokers know which insurers are most favorable for specific health profiles and can provide additional context to underwriters to help you qualify for better rates. That's very true. What you'll find is that insurance companies all have different things that they don't like in their underwriting or that they do like. But the fact you need to know is that they're all different. So working with the broker gives you an advantage because he's able to comb through all those insurers and match your needs up with the right company. Simplified shopping experience. Some more core advantages here. They explain policy types, compare features, and highlight differences that aren't obvious, like conversion options and term policies. One point of contact. Even though they work with many carriers, you deal with one person who handles quotes, paperwork, underwriting, and questions. Long-term support. As your life changes, marriage, kids, retirement, etc., a broker can reshop your coverage across carriers instead of locking you into one company's offerings. Easy side-by-side comparisons. Brokers can use tools that let you compare policies, features, and costs quickly, making decisions clearer and easier. So what that means for you, more choices. As we said before, you're not limited to one company's product. There's not one company that's right for everybody. Lower premiums. Shopping multiple carriers increases price competition. Better fit for your health. Brokers know which companies are lenient for specific conditions. Less hassle. They handle quotes, forms, and underwriting. Ongoing guidance. Your broker can adjust your coverage as your life evolves. It's important to make sure you're on the same page with your insurance broker, doing an annual review on your coverages. That way, when changes do happen, and they always do, your broker can address them quickly and find the best solutions for you. Bottom line, a life insurance broker gives you choice, advocacy, and efficiency. Instead of trying to fit your life into one company's profile, a broker helps you find the policy that fits your life. So what makes Penny Insurance great? More carrier options. Penny works with dozens of top-rated insurers, which means the client gets the best match for their health budget and goals instead of being forced into one company's product. Faster applications. Their tech platform streamlines e-application signatures, case processing, cutting weeks off the traditional timeline. So getting your coverage placed more efficiently, faster, and with fewer headaches. Better underwriting outcomes. With in-house underwriting expertise, which we have, and access to multiple reinsurer manuals, Penny can often secure better rates for people with health conditions or unique risks. Continued. What makes Penny great? Clear communication. Their case management team keeps the process moving and keeps clients informed, reducing the frustration of waiting without updates. Higher approval rates. Because they know which carriers are most lenient for specific health profiles, clients are more likely to get approved at a favorable rate. No extra cost. Brokers like Penny are paid by the insurance companies, not the client. The end user gets all the benefits of expert guidance for free. Long-term support. After the policy is issued, Penny helps with beneficiary changes, policy reviews, and future coverage needs. Any service work that's needed. Your broker will be there to make sure that those changes get handled immediately. Some of our top carriers that we work with here, Allianz, Mass Mutual, Lincoln, John Hancock, American General, Mutual of Omaha, and that's just to name a few. Dozens and dozens of carriers that are available here through Penny. And like I mentioned before, we will match you up with the right one. That's just some closing thoughts. Life insurance decisions work best when aligned with life stage goals and long-term planning. Term and permanent coverage are not competitors. They serve different roles within a strategy, and your agent will explain all those strategies with you. Protection needs often evolve over time as income, assets, and responsibilities change. Permanent solutions can add flexibility, accumulation potential, and legacy planning benefits. The goal is not choosing a product, it's building a plan that adapts over time. And on this last slide, I'll let this wheels kind of illustrates all the different things that Penny helps with here. Life insurance annuities, long-term care disability, tax efficiency, corporate life, retirement solutions, and health insurance. So no matter what your need is, we have somebody here on the team that will be able to assist you and make sure your needs are met and lay out a sound financial plan, insurance protection plan, whatever is needed. That is all I have to share today in today's webinar. I enjoyed being with you guys this afternoon. Very grateful for all that attended. Please, my contact information's on this slide here. Reach out to me, call me, email me anytime, and I will make sure to get you pointed in the right direction to get your needs met.